Scotty, contributing editor of Wealth Management magazine. Today, we're joined by Todd Ahlston, CIO of Parnassus Investment, for today's Fast Chat. So, Todd, you started as an analyst and then a portfolio manager, and now you're CIO. So, what is ESG investing like now, and how has it changed since you've been on board?
Well, Maria, it's great to be here today. I can't believe 25 years goes by in that kind of a pace. So what a remarkable ride it's been. So 25 years ago when I joined the company, ESG was just a novel concept that like people didn't think about. Do I think about sustainability, values, the environment, how you treat your workers, corporate ethics? It wasn't at the forefront. And so 25 years ago, when I first started talking to companies and was talking to a CFO or a CEO, and you ask them, how do you think about the environment? How do you think about, worker rights? How do you think about diversity in your company or women in management? They were just like, wow, no one's ever asked me that question before. And so they looked at me bewildered, like, why does it matter to you? And I was like, well, it matters to us because we think companies that treat the environment with respect, that bring in workers, diversity, inclusion, and then build with a sustainability lens is good for business as well as values and inclusion. So fast forward now 25 years, these are table stakes. Think about this. Every day we're thinking climate, diversity, inclusion, the social fabric of our country. So it's been an incredible ride. I'm super passionate about this because I believe it's a really important role for business and our social fabric and growing the economy and bringing people along with it and helping to bring sustainability to the forefront. So it's been a very exciting 25 years. Can't believe 20 has gone by running the core equity fund at Parnassus, and I'm just really excited about the future.
Has COVID-19 impacted, quicker adoption of ESG, or how do you think that's really changed how people feel about ESG investing?
We think it absolutely has. And so in the same way, it's accelerated technological adoption, how you buy things, where you buy them, how you communicate. Really, COVID brought to the forefront a lot of things at one time. First of all, the employee safety, compensation, essential workers. It was really a double down moment for how do you treat your employees first. Second is when the downturn hit, are you thinking long term to invest behind your people, behind your business? Because clearly in downturns, it's when you really invest then that builds for the future. And third and fourth was clearly some of the very, very intense social discussion around diversity and inclusion has even become more important now as certain workers have been disadvantaged in the downturn. And now we really need to basically reinvest in society and bring everybody along in the recovery post-COVID. So the absolute answer is yes, and we think it's going to stay in the forefront going forward and long term.
Parnassus manages the largest ESG fund, and so how do you shoulder that responsibility?
Maria, it's really important. First of all, there is just the basic reality of return. And so it's not lost on me that delivering performance full cycle in upturns and in downturns, we're a fiduciary, and that is not ever lost on us. That we're taking people's retirement money, hard-earned money, and it's a basket with the eggs. We take care of them. But the second part really is about engagement. So having that type of capital behind our company, we can now have more in-depth dialogue and engagement on climate, on diversity, on the long-term dynamics that we think can improve the quality of companies as companies think long-term and about all stakeholders. And at some point ask the question, not only about capitalism and making money, very important, but also what question and what purpose does business serve? And how can we balance the principles of that with performance and then come out of COVID stronger? Because clearly COVID shows some of the social fabric that we need to put back together to bring everybody along. And ESG basically wraps around all that. So principles, performance, and the long term is going to be very important. And as a large ESG player, we're having those discussions and those engagements with the investments we have.
Yep. And so that takes me to the next question. So Parnassus is a pioneer in ESG, but what is your the company's investment philosophy, and how does also ESG impact your investment analysis?
It's a great question. So to really boil that down, we're looking to invest in high quality companies that are innovating, that have built sustainable competitive advantage, and that are essential businesses run by management teams that value the environment, the social, and the governance. And then around that are helping to solve some of the important societal issues long term, but do that in a way to build wealth. So for us, one of the key things is really finding companies now that looking out 10 years coming out of this pandemic can be involved in data, the five waves of computing. Like you think about data analytics, you think about agriculture and precision agriculture. How do we get more things with less resources in terms of like the climate and decarbonizing and including people and hiring talent? And so we can build great businesses that generate profits, but do that in a way consistent with sustainability across whether it's financial services, technology, environmental issues, life sciences. And finally, we've got some big investments in those things that coming out of COVID, life sciences, research, tools. You can see go around the 10 industry groups of the economy. And in each of those, we're looking to find those double down opportunities where innovation, sustainable advantage, and ESG intersect, and then building a portfolio, 40 stocks built to last. Companies that invested in the downturn come out of the pandemic stronger is really important. And those are really the anchoring parts of how we look to invest.
We touched a little bit about COVID-19 impacting how people think about ESG. Where do you see ESG evolving over the next 20 years? Because clearly from 1995 to now it's changed and it's changing as we go forward. So what are your thoughts around that?
Maria, that's a fantastic question. And I think it's really going to come down to a lot more dialogue and engagement with companies. So the initial 30 years ago was, don't own alcohol, tobacco, gambling, your sin stocks. That was the initial part of the movement, and then invest behind quality. Now there's a much more stakeholder capitalism, which is seat at the table, meetings with management to really address climate, diversity, taking carbon out, wealth inequality. All those things are going to come into discussions that we need to, again, balance building great companies for the future, but bringing everybody along. Because if we don't think about climate, wealth inequality, and diversity, society can kind of teeter on that. So it's balancing change, doing that, building returns, but it's going to be a lot more dialogue than just screening out companies. It's going to be we want to build a narrative together. We want to build a stronger America and a globe together. It's conversations like this, face to face, of how do we build great companies and invest behind that versus just excluding companies. That's the legacy of ESG.
Yeah. So let's talk a little bit and drill down a little bit further on quality companies. So, obviously I don't want you to name particular companies, but what sectors do you see have really changed, or what can you talk more big picture on quality companies and what you're seeing?
Well, for quality for us, we're looking to find long-term mega themes. And so for us, we all know data and compute is going to be really a big thing. And then we all know some of the big companies that are enabling data and internet communication. Now, those can be great businesses, but underneath that's going to be those businesses take a lot of power, a lot of energy on the grid. So for us, a quality company is one that can grow along a trend, say data, compute, 5G, all those different trends, but do that in a way that maybe they can take carbon out of their business, become more efficient. And so you think about in technology, then again, life sciences, research tools, how to push that novel science and develop life-saving novel drugs and therapies. It's in industrials with logistics. How do we get packages to our door with less carbon and faster? Looking at, say, other infrastructure, how do we get clean water for cities and towns? And there's wastewater and industrial water. And how do we do that? How do we monitor that? And it's the companies that are investing behind those. And then in financial services, there's going to be next generation ways that people can access capital, and to do that in a fair and equitable way. So you can see we'd like to drill down deep and then not only find a trend, but then it's got to be a sustainable trend that we think, whether it's environment, social, governance, bringing people along, it's balancing a capitalism with bringing people along in society, and then overarching that, solving the most important complex problems that we have over the next 10, 20 years.
Yeah. Okay. And so any final thoughts you have for viewers?
I would say COVID-19 has been a massive accelerant. We all know a year ago, our life felt a lot different. And it feels the world's moving faster and we're adopting technology faster. And I think what's really important, number one, as an investor, to the people watching this, it's really important to slow things down. I think they say the great ones, whether it's in sports or whatever business you're in, they slow the game down. And so slow things down and then ponder and think about the long game. And I think the faster society moves, the more susceptible you are to miss and put emotion around. So for us, we really like to slow things down, think about the mega trends, and then invest with that temperament, the time frame, and then have that vision, because we're going to have a lot of change coming out of COVID. And if you can find the long-term winners in the economy, do that with sustainability, balance, and for us, principles, performance. We think that's the anchoring way to put money to work in this economy, because the post-COVID economy is going to look much different than what we had in 2019. And so slow it down, long game, sustainability, principles, performance, and then temperament around that is really important.
Great. Okay, so thank you and happy anniversary. And I look forward to speaking to you soon.
Thanks so much.